Hello, I'm back and open for Q&A. Any comments and questions?
Ramin, I had a question.
Yes, Lucas.
Well, I had two questions actually. The first one is, why are there some really successful traders that just prefer to trade their own capital and they prefer to not have a hedge fund? It's always been a big question mark for me.
Oh, many reasons. I mean, the privacy, even like Jim Simmons, we still don't know his secret. So he had this mathematical formula and also, some people I know, I tell you about myself. I'm not saying I've done great jobs. I don't want to be in the limelight. I don't like to be famous. I don't want to be in the, uh, n- never had interest to show up on CNBC or, Bloomberg. Uh, although I had a dream when I was late 1980s, beginning of 1990, I met Louis Rukeyser and Wall Street Week, which used to be on public TV, was the most watched Friday night program. I met with the producer, I met with Louis Rukeyser. That was a dream for me as a young man, as a young, somebody invest in investment world. I want to be his guest. Other than that, it's all depends on your goals. So and also the control, you don't have to answer. My God, the paperwork, the bureaucracy, we got to have, all the information has to be open. And so it is more of a preference. So you will see some um, successful traders that you don't even know about. So, and I do have a couple of friends that they have been magnificently successful, but not many people know about them. So and then the funds, you could see with like Kevin Griffin, not bad. He invested in that, but half of the money came from the fees, the performance fees. So that's not a bad living. So also that's helpful. It all depends again on your own desires, Lucas. So and how famous or how open you want to be. So. Is that
Yeah,
helpful? Does that make sense?
yeah,
Yes.
that's definitely helpful. I guess it's just preference.
Exactly. It is. It is. Big money too. I mean, after 20 or 40 billion dollars, my God, yeah,
Yeah.
they living big life. All right.
Uh,
Second question. They have
yeah, so if the S&P on average has done better, then why even bother investing in a hedge fund? Why don't you just go buy SPY?
yeah. So the idea is we have to remember generally the investors who get these hedge funds, this is not their only investments. Now, the dangerous part is, we have sovereign funds, we have pension funds, pension and institutional funds for diversification reasons, they come into these things and sometimes they go overboard, which again is worrying. So it is depending on number one, that's where the reputation of the fund manager becomes, important, and their obviously staying power. The second thing is that diversification role. Like as I mentioned, one of our members, for instance, he used to come actually quite a few times in the first 2 years, and he hasn't been here lately. His hedge fund is manages like 55 million, and all they do, they sell put options, out of money put options on S&P. So people who invest in that, that's not all the money they got. They probably have real estate. They're actually investing in some other funds, but they like this because they create alpha for them, more of an income. So it is all depends on their asset allocation. So you will not see, one investor puts everything in their one fund. So and that's the reason, Lucas, it's important to get the concept of accredited investor. That's what they ask, like you have to have $1 million net worth, which is usually a lot more than that. So it is not all the money is in that. But unfortunately, as I said, I would say 80, 90% of people don't really make money. They just pay high fees. It's also sexy, by the way, because, oh, I own a hedge fund. Okay. Yeah. There are people who like that idea. So,
Yeah.
Lucas, you and I should start our own hedge fund, and we'll just call it SPY, and just keep collecting.
the commissions will be the lowest.
Yeah,
but- Oh, that's a good one.
I mean, I think I've mentioned it. I've got a friend here. He runs a hedge fund, and all they do is sell calls.
Yeah.
That's all they do. But calls that are way out, 1, 2 years out.
Yeah. I mean, this our friend, he just sells out of money put. That's all they do on this, and only on S&P too, nothing else. They don't get involved with anything else. And they want me to join their team 4 years ago, I think. Because I said, that was such a boring thing for me. I cannot even think about it. So, but yeah, yeah, it's
I mean, I think you know who I'm talking about. All he did was, he had a hedge fund. They would sell puts, and he blew up.
absolutely, yes. It was Jim. Yeah, he was in tears. He was up to like 30 million, 25 to 30 million blow up. It's just at no time. And he was doing natural gas and bet that. So yeah, I mean, these things happen. You don't, I'm telling you, I lived through this in 2008, 9. It was bloodbath. So everything sounds good till it doesn't. So it was, and that's why it's important to have this longevity. That's why Ray Dalio's of the world or Jim Simmons have lasted. I mean, Jim Simmons had some amazing return, like 70, 75%. And it was just, but again, he never shared really his algos. So now that he's passed away, I don't know what will happen. It would be interesting. But yeah. Anyway, I hope it was informative. I was hoping we'll have more people. I thought it would be, yeah, it would be a good subject, but here we are. So
Ramin, can I ask something else?
yeah, always.
Uh, so do these I know it depends on the size of the hedge fund, but I'm assuming they have like some sort of, do they have like different traders or different analysts, or is there one manager that makes all the decision and does all the trading?
Great question. So what happens with these hedge funds? No, like, when we think about Ray Dalio, no, he doesn't do anything. He's got a whole team, and that's the beauty of it. But when, I mentioned about my neighbor, he was doing 20, that was him, and he made all the decisions, and his partner was a marketing guy. He just knew a few wealthy people. He told them, oh, you gotta come, and my friend does really good, he has a strategy for trading S&P, and he was Australian, so he was using Australian market, and that was it. And they did the
Right.
compliance, and I think it was like about $25,000 to file with FINRA and SEC, and that was end of that. So, but depending on the size. So generally, these big, yeah, they have a huge team. But they do have their own philosophy, and they use very complicated, depending on your strategies, very complicated tools. So yeah.
Okay. And if
It's feasible for you and Martin to start a fund, because it doesn't have to be, you could have a fund for 500,000 or, raise money, 1 million. I was approached again, sorry, I just talked with my stories. I was approached with a fund in Dubai, and all they do AI option strategies for income. I mean, similar to what you said, Martin. They do the call options, not just on the spot. And that was their strategy. But they said, well, our AI algos will do that. And they wanted me to, partner with them. And they said, we will move to London if that makes sense. And I thank them. But there are, constantly there's somebody who wants to come up with overnight they find this 2 a.m. idea and they just want to raise money. And unfortunately, there's not a lot of protection for the investors when that happens. So, but yeah, but it's not very difficult to start a hedge fund. Sorry, Lucas, I think you were saying something.
Yeah, I just wanted to ask, and then like as far as investors that invest their money, is their investment like protected? Is there like some sort of insurance policy, or what? How do hedge funds in America usually go about that?
No, nothing. And that's the other thing about, I keep going back to 2009. We have the SIPC for the uh, people who are with the large brokerage firms. And you see how, and I think Jean-Claude has been around long enough to see some of these funds when they blow up. They just blow up, they have to liquidate. And I mean, I won't go too far. Look at this with this cryptocurrencies, what happened. I mean, there's not really, I mean, they liquidate the assets, that's it, but there's no insurance. I don't believe so. I've never seen one.
Right.
And that's what, again, with mutual funds, the investors are protected. With hedge funds, is the funds generally are protected. So they're not taking a lot of risk. I mean, they have their reputation they have to protect, really. So I mean, that's their income coming in. So
Right.
yeah.
Okay, that makes sense.
Yeah. I mean, that's Jean-Claude, do you have any experience with that? Or
Yes. Yeah, I guess they try
yourself?
to protect the normal person by not allowing normal retail investors. You have to be accredited. So they assume that accredited investors, because they have a certain amount of money, they're more aware of the risks or they can afford to lose. So they're only like the normal person isn't allowed to invest in those vehicles because they don't know, they either don't have the knowledge or the loss would be too extreme on their net worth. So I think that's how the government tries to protect them.
Yeah, so yeah, if they justify it. So, and it's not and, it's or. So you could have 1 million of capital, you could make 200,000, or you could be knowledgeable. You have to, in investment business if you are. So, I mean, there's not a big net, protection net, but they assume you know what you're doing. So that's why these hedge funds come and go. I mean, I have a subscription to, I used to, I'm not, because it was free, I would take it. But it was like, I think it was like, I don't know, 500 or 600 a month for one publication, and they will analyze all these hedge funds. I was gonna take a picture of it and put it here. And I said, that's okay. And there's the HFR, they go and they can analyze, you can subscribe to them. But yeah, I mean, they come and go. Like, yeah, we've got tons of them all over the world, actually. So Singapore, Hong Kong, to obviously in Europe, London being the center of that. So anyway, yeah, that's it. And then next week we're gonna are we ready, Jean-Claude, to do the how to listen to the markets? You know,
To read the book. Yeah.
I think it's a timely. I think that would be a good one. It's a new book, so we can discuss that next week. Should be fun. And I think they will talk about subject of hedge funds also. So it'll be interesting. Anyway, all right. Any other question?
So, Ramin, I had a random question. I wanted to invest some money in the sovereign wealth fund of Norway. Is that possible?
I mean, well, the sovereign, it is sovereign, so it's the government's fund.
Yeah,
Find, I mean, like we have like Yale portfolio endowment, for instance, Harvard endowment. They could be a fund which replicates that. That
Okay.
one, how we have Warren Buffett. But sovereign, that means it comes from that government's funds, and like Saudi Arabia or Dubai or Norway. And they actually, the money is owned by them. And that's the only assets. I mean, that's the only direction that they can take. No, there's no outside investors can come in, because it will be create a lot of regulatory. Remember the disbursement and other things. I mean, tomorrow you want to take your money out, and here the government takes a decision on. Actually, that would be a good subject to just have a class on sovereign funds, because they have been very successful and the largest
I've been
funds.
super successful. Yeah.
Yeah, I mean, Norway did very well. Of course, they had the country as a whole did very well because of the oil. It was just doing so good. So, and no
They've also
debt.
discovered a whole bunch of rare earth material, rare earth, metals. So
Yeah, but again, I think the only way would be something that replicates that, or finding out. Um, Even see with the hedge funds, it's very difficult. I mean, we do have, and I like that guru focus. I know Jean-Claude likes that too. So sometimes you find something about, but they have these such a complicated ways of investing that you don't, even if you got the information so late, that doesn't really help. But that would be one. I used to just, with Yale and Harvard, they come out. That used to be a really good indication, because they used to be very good. But even them in 2022 had a difficult time. So, but, anyway, yeah, sorry. I don't think, yeah, there is no, not this, unless we start our own island and have our own sovereign funds, get our own government. Yeah. All right. Any other question, comments? Again, always grateful to have you here. Thank you so much for your time. And we'll meet again next week, and we talk about the book. And if you have a chance, this TV show is interesting. They're getting a little traction with people. So I'm going to be talking to a movie producer next week. So we'll see. Anyway. All right. Any other comments? Anything else? Any last words before you say goodbye?
no, all good. Thanks for me, Jean-Claude. Great to see you again, Lucas. Everybody, take care.
Thank you, everyone. Appreciate it. Have a wonderful rest
Thank
of
you,
your day.
Ramin.
Thank you.
Bye.
Thank you. Bye. Bye.
Bye.